what caused you to exit the offshore bets? And I'm all out, and I'll let Roderick speak for himself.
Yeah, I sold about half when every company gave their guidance at the beginning of the year. And if you follow their guidance, Valaris would have come out at 0 free cash flow for the year, I think. And Noble on their own guidance would have come out at about a 10% free cash flow yield. Look, it's for me, I've been involved in offshore since 2021, but of course, strategy that I currently run has been running since the beginning of 2024, which was not an opportune time to start investing in offshore. But I think everybody in the industry missed. Some people still call it a pause. Some call it a turn in the cycle. We're sort of in year 3 or year 4 of probably a multi-year bull market, but there's a clear showdown. And in the middle of last year, it looked like 2025 was going to be a pause, and people would point at, look, there's still plenty of demand for subsea equipment, which is where the bottleneck is. The bottleneck apparently is in subsea equipment and in FPSOs. And once they caught up with all that equipment, then the market will continue in 2026. And now it's become late 2026, maybe 2027, and you got a company like Valaris that's I think out of the 13 high-end deep water rigs, 6 or 7 will be idle by the end of the year. That's too much. It's a management team that just doesn't seem to understand that they're a price taker. They have no pricing power. You have very expensive assets that you should put to work. So yeah, it's just become, instead of a 1-year pause, it's become a multi-year sort of recovery. And if there's so much idle equipment in the market, at some point that's going to impact rates, and that's only just begun. Like I think Valaris recently announced 2 deep water contracts for late 2026, 410,000 day rates. That's a decent step down from where we were a year ago. So yeah, then if you look at the kind of cash flow that the companies currently make, none of the companies is particularly cheap. You're talking about maybe 8 times free cash flow for Tidewater and 11 times for Noble. But that's for companies that have a cost of debt of 9 or 10%. And at least if you're lending money to those companies, you get your money back in a couple of years. But if you're an equity investor, 10 years from now, you'll have a fleet that's even older than it is today. It's a depreciating asset.